There are two healthcare REITs listed on the Singapore Exchange. One is Parkway Life REIT and the other is First REIT. For Parkway Life REIT, I have done a video presentation on it last week. And you can find the link to watch it under the section related videos in the description below. Today, my focus is on First REIT. One of the things investors will remember about First REIT is the huge tumble in its unit price from around 128 Singapore dollars in January 2018 to a low of about 20 Singapore cents in January 2021 due to fears over its sponsor Lippo Karawaki's financial difficulties, as well as the stability and sustainability of rental income streams from its hospital properties leased to the REIT. Since January 2021, its unit price has not gone above 32.5 Singapore cents. In fact, it has been moving in a range of between 22.5 Singapore cents and 28 Singapore cents. The price is way below its IPO price of 71 Singapore cents. In this video presentation, you will find my review of the Singapore-listed healthcare REIT in terms of its financial performance, portfolio occupancy and debt profile, as well as its distribution payout to unit holders. Let's get started. Listed on the Singapore Exchange in December 2006, First REIT is Singapore's first healthcare REIT, where it invests in hospitals, nursing homes, and healthcare-related properties across Asia. As at 31st December 2023, which is the end of the REIT's latest financial year, its portfolio comprises 15 properties in Indonesia, out of which 11 of them are hospitals, 2 are integrated hospitals and malls, 1 is an integrated hospital and hotel, and 1 is a hotel and country club. The healthcare REIT has 3 nursing homes in Singapore. In case you are wondering, these properties are Pacific Healthcare Nursing Home at Bukit Merah, Pacific Healthcare Nursing Home 2 at Bukit Panjang, as well as the Lentor Residence. It also has 14 nursing homes in Japan. In terms of rental income by geographical location for the latest financial year 2023, Indonesia still contributes a lion's share towards First REIT's total rental income at 82.4%. Followed by Japan at 13.7% and then Singapore at 3.9%. In December 2020, First REIT launched its 2.0 growth strategy, which focuses on 4 areas: reshaping its portfolio to reduce reliance on one single country and at the same time acquire yield-accretive properties, recycling of capital through divesting non-core assets and deploying proceeds into higher yielding and strategically located properties, strengthening its balance sheet, as well as continue to pivot and ride on megatrends. The following table is First REIT's financial performance and distribution payout to unit holders recorded over the last 5 years. Looking at its gross revenue and net property income, it suffered a huge decline in the financial year 2020, largely due to rental reliefs extended to all of First REIT's tenants in May and June 2020. And a further 2 months extended in September and October 2020 to its tenants in Indonesia to help alleviate the strains caused by the COVID-19 pandemic. For the financial year 2023, the slight drop in its gross revenue and net property income can be attributed to the weakening of the Indonesian rupiah and Japanese yen against the Singapore dollar. Moving on to First REIT's distribution payout, it is one of the few remaining Singapore REITs that have a quarterly payout frequency. However, there are 2 things to highlight about its distribution payout over the last 5 years. First, it has saw year-on-year declines in 3 years. For the financial year 2020, due to a much weaker gross revenue and net property income because of rental reliefs extended to its tenants as a result of disruptions caused by the COVID-19 pandemic. For the financial year 2021, the further decline in its distribution payout was largely due to an enlarged unit base from the issuance of rights issue. And for the financial year 2023, it was due to higher finance costs, currency translation impact, and a one-off increase in unit base. The second thing to note is the REIT's distribution payout in the financial year 2023 was way below the amount declared in the financial years 2019 and 2020. This is something investors may want to take note. A couple of things to note about First REIT's portfolio occupancy profile. First, it has maintained a full occupancy rate throughout the entire 5-year period I have looked at. Second, it has a long portfolio weighted lease expiry, or WALE for short, with more than 70% of the lease due for renewal only after 10 years as at the end of 31st December 2023. Third, from my understanding, in its financial results presentation for the financial year 2023, there is a built-in rental increment of at least 4.5% for its Indonesia hospitals and 2.0% for its Singapore nursing homes. Moving on to the REITs debt profile recorded over the last 5 years. Apart from the financial year 2020, where its aggregate leverage spiked to 49%, primarily due to revaluation losses on its properties in Indonesia, where the COVID-19 pandemic severely impacted the valuation of the REIT assets in the country. The other year saw its aggregate leverage maintained at a healthy level. Another thing to note is the REIT does not have any borrowings due for refinancing until the year 2026. As at 31st December 2023, it has 87.2% of borrowings hedged at fixed rates, which in my opinion is a high level. Here is First REIT's unit price movements on a weekly time frame since May 2022. If you notice, its unit price has largely moved in the range of between 23 and 27 Singapore cents. I have also calculated the distribution yield at the two prices based on its full year distribution payout of 2.48 Singapore cents for the financial year 2023. Looking ahead, do I foresee the REIT's unit price break out of the range and move higher in the near future? Personally, I think it will be a tall order, as the incident in 2018, which led to a huge tumbling in its unit price, still lingers in the minds of investors. Another thing will be the huge percentage of income coming from one single country in Indonesia, which I know many investors are not too comfortable with. To summarize, here are some aspects of First REIT that I appreciate as well as some that I find less favorable. The REIT's 100% occupancy rate, long WALE, as well as its healthy debt profile over the last 5 years are something I find desirable. On the other hand, its financial performance has been rather irregular in the same time period. Also, while the REIT pays out a distribution on a quarterly basis, but its full year distribution payout in the financial year 2023 is more than 70% lower than the amount declared in the financial year 2019. Another thing to note is that as more than 95% of its income is derived from its properties in Indonesia and Japan, the weaker Indonesian rupiah and Japanese yen may continue to impact its financial performance and distribution payout to unit holders. With that, I have come to the end of my review of First REIT. Please note that everything I have just shared in this video presentation is solely for educational purposes only. There are not buy or sell calls for the REITs units. You are strongly advised to do your own due diligence prior to making any investment decisions. If you find the contents presented in this video useful, I would greatly appreciate it if you can give it a like. Also, if you like the contents so far in this channel, you may want to consider subscribing to it so you will not miss out on any new contents I will be posting in the future. Thank you for watching, and I look forward to talking to you again in the next video.